Hey everyone. What a day. What a day. This was just pain, right? The pain trade. So I didn't have to move my call spread. It's still sitting there. I mean, there is, 100 points for, I have got plenty of break even on it. I don't have to do it immediately. What I'm thinking, I went out to April VIX to see what's going to be, coming up. And lo and behold, 22 has the high volume, and I mean high. So 16 to 18 gex, it's split evenly. And so we're sitting right in the middle of that, which may be why the market is pausing. Um, and we're also on the NQ 6-month one. So let me pull the NQ up for you. You can see what I've been looking at. All the other markets jumped over their 6-month ones, but the NQ was really the one that we wanted to watch because and we just have been flirting with it, but we're coming into the monthly 2 right now, which has held right there. So this is still holding. We've got a monthly 2 right there. You see it's holding, and they're trying to break it, and it's like a wall, right? And then the one right above it, there's another monthly 2. So that's the close and the open. Calcs on the close and then calcs on the open. So they're holding price in or trying to very hard, sitting on it. You've got GMC reporting tonight, is that right? After the bell. So not sure that had anything to do with it, but there's your 2500 right there. So we have not broken out yet. We're still here. And then we've got quarterly ones sitting right on top. The quarterly ones I'm not so worried about. Actually, you know, I am worried about them because even though the options expire last week, right? On Friday, the triple witching, quadruple witching, whatever. Um, the calendar, which I use, right, and what dealer uses and what JHEQX uses on SPX, this is all, March 31st. So this is the large institutional money. So your large institutional money, and in NQ, there is many more futures contracts than there are options. So the volume is on these ones right there. It's the quarterly ones. So we might get this wick or just a up and down if we don't come back down by 4 o'clock. Looks like it's not going to. We just passed it. But we didn't break the monthly 2. And so we're sitting right under these quarterly ones. And that's the huge risk right there, 2586. 2543 and 2586, and they don't even want you to touch it. When they don't even allow you to touch it, right? Get close to it, you know that they've got their risk lines parked on it. And they have been keeping us off of it. So let me go back. Oops, I goofed this up. How in the world am I going to fix that? Hang on. I guess I'll have to try to fix that later. It's got it off my screen. Let's take a look at the quarterly one. And you can see here we broke it. And 58.50 is the level. So 58.50 is this 3 up here, and they would not let us get through the weekly 3 was pinned at 32. It's a 1 period, so it's the R vol. This is the H vol. 2. Actually, I think I went through that this morning. This is a R vol also, so it's close and open, but the weekly 2 is the H vol. So why in the world are they pinning us here on ES when ES is the hedge? And, it's just crazy. It doesn't make any sense. So the only thing I can think of is NQ quarterly ones are where all the risk, where all the money is. And, there, I guess, is a way to confirm that if we come over to the CME Group's website. Have you ever done this before? Let's just look at it real quick. Go over to the CME Group, and then we can look under markets, and we'll pull up the NQ. They change this all the time. I'm looking for data right here, the volume right here, volume. I wish they wouldn't change it so many times. So here's the futures. And so you can see the volume has come down significantly. And they're not showing the March 31st volume, but the options, we want to get those standard options, American style. You can see how low it is. There's not very much volume at all. In this, it's all in the futures contract. So this quarterly expiry, March, I guess it's all moved to June. Where is the options? Well, that doesn't make sense. Okay. So March 31st, end of month, I guess, is what it's end of month in the physical quarter. So they've already rolled everything to June, and they're not showing monthly volume on this. I don't know why. We do need to see monthly end of month, but it's already over. But we can pull up Quick Strike. It'd probably be better just to take a peek at it, because now I'm curious what's going on. So here's our end of month. And if I pull up my volume, 2,300 and 2,800. And we're at 25. We're right here at this low volume, right in the middle. So it could go up to 2,800 or back down to 23. It looks like the high volume is sitting at 2,800. So that, that could be those short calls. So they may be wanting to have it go down to, well, here's 21,000. So there's your short calls, and here's your 21.5. Here's your 25. So that makes sense. This was the high call right in the middle. All right. And just to take a peek at the open interest, 21,000. So we might, they might try to get it back up to this 21,000 level. Yeah, I got this thing. I'm going to have to close my workspace and reopen it to get that back up. I can find the chart. There it is, and try to fix it over here. Hang on. Maximize. There we go. I got it. All right, I got it back. Sorry about that. All right. It's hard when you get the window off your screen. So the 17 is, it held up. We're right in the middle of the 16 and 18, which is the April high GEX. But, with that 22 volume, that is going to send price back down. So, we could take a look at the SOFR on Quick Strike SR. Change this over here to our interest rates. Yeah, this is not the right contract. Let me just peek at my other chart that I can't show you real quick. Hopefully soon that they'll be releasing this. It looks like they're making a lot of progress. A lot of progress. Yeah, they're not even showing March anymore. Everything's shifted to April. So, for the option worlds, March is done. So, but I can tell you for a fact that dealer uses R levels. So, dealer has got their private hidden risk line sitting right here, and they're not letting us get near it to touch it. And I think my we won't have to wait long to see if my theory holds water because they're going to get us off of that 25.43 or 586 for sure, not let you get close to it and have it come back down before next Monday. If it breaks above it, then that would surprise me. That would surprise me a lot. All right. So with that said, going into tomorrow, our weekly contract, take a look at that again. Um, our weekly twos are up here at 58.50 to 58.74 and 58.96. So that's 68% of the range. And so we're very close to rolling over anyway. Um, in an uptrend, usually the weekly two will hold price like right here. See what I mean? There's a weekly two. It's going the wrong way. Need the upper weekly two. There we go. Right here. I just saw it. Where did it go? There's another one. Right here. Wrong way. There was a two right here above this one. And then it rolls over because 68% of the time, that's your statistical level that you always get that, response around it, or most of the time, most always. Nothing is always, always. And at least that first touch. So you can see here that we played in some ones, or excuse me, some twos that were inside these ones. But these are R balls. So we can't even get out of the R ball range to get into the H ball, showing you that the market is very compressed. So when the R ball is inside the H ball, you get the compression. When the R ball is outside the H ball is when you get the expansion. So I need to make my charts different so that we can tell the difference between R ball and H ball so that we can see those distinctions. Where is the weekly R vol in relation to the weekly H vol? Show me so that I can see a chart and see that the R vol is underneath the H vol like it is here. R vol is underneath the H vol, and we've got that compression. And all the daily range is very, very, very compressed. I mean, we are just crushed on the volatility. All right, so I'm going to come up with a system for R vol, H vol, so that I can, I guess I can use those dash dots for H vol and standard, solid, and um, dashes for open and close. I need more color coding, or maybe a dark blue and light blue or something like that, or a dark orange and light orange, so that we can see the distinction, but I'll figure it out. But yeah, that's interesting. So big takeaway, 22 for April. So going into OPEX April, we're looking at 22 bigs, which is way up here, right? We're going back up to the top. Way back up here. So I had 1652 for our floor. We're close, real close. And then the bounce. So so that's what we're looking at. And we'll see what happens. All right, guys, that's it for me. I'm just out of lines, dashes, and solid lines, or how do I show all these lines on the chart on one chart or the other? It's important to see all of them because they really do make I mean, if it didn't make such a big difference, I wouldn't bother with it, but it does. Do you see how those spread apart? And it's very important to know. If you were just using opens, you wouldn't have the resistance or the support. And there's the close. So when that gap occurs between the open and the close, you get the spread of the line. And if the market is spread between the lines, that's when you get your breakout more. If it's right together, you get your opportunity for the compression. And then, of course, your position of whether your R vol is above or below your H vol. So here, let's just prove that to you. I'll put the R vol on here. I can add another daily one, but this time I will make it a color. Where's my colors? We'll make them orange. No, I've already got orange. I've got too many things saved. I can't see anything anymore. Here we go, all red. All right, so day one on the close. Look at that. Look at that. I told you. It's inside. You see that? It's inside. So when you're outside, see it's outside here and it went outside. Look at that. So it's the position of the H vol to the R vol that can be very telling. Look how narrow this is here and how price stayed to it. But here it went out, but it didn't get out very far. It actually did reverse though, because I guess it doesn't matter if it's, spread out. It went all the way to the bottom one and then gap down. Um, when there's when they're outside, you have that chance for a move. Here it is outside and you got the move. So R vol, H vol positioning, and outside, and here you go. Inside, you stay inside. All right. And then, of course, it helps to have the same positioning on a monthly or a weekly. So if you can find your R vol greater than your weekly or monthly, you have a bigger range to trade. And especially when your price is going above the one, that's your breakout zone above the one. This was a good trade opportunity. You had R vol on top of the one, and when you finally did get this range broken, it took off. So play with your R vol, H vol, and let me know what you think. and we'll talk at you tomorrow. Thank you so much. Y'all have a good night.